And we're really just started a new bull market in silver. So this is early. It could certainly go from 60 to 200. I mean, that's only a little more than a triple. But it's not even so much silver going up. That will be part of it, but it's really the US dollar going down.
Renowned global investor Peter Schiff has issued a major warning about a global economic collapse. Based on his actual breakdown, here is the real truth about the markets.
Well, I think investors, are being fooled by the Fed's rhetoric, by Walsh's tough talk about inflation fighting. I don't believe that he can walk the walk. He did admit that inflation is a choice, and I agree, and it's exactly what he's going to choose. His predecessors chose inflation, and he'll do it for the same reason, because if you don't choose inflation, then you have to choose something else. And that really is a big drop in the stock market, the real estate market, a recession, financial crisis. You got to force fiscal responsibility on the U.S. government. And none of these things are going to happen. I think that the markets are not going to get the rate hikes that they anticipate. And even if we do get some hikes, they'll be too little too late, because we need much bigger hikes than the Fed is even, posturing that it might deliver, because it's so far behind the curve when it comes to inflation. It's created so much inflation. And in fact, despite the tough talk, money supply continues to grow rapidly. The Fed's balance sheet continues to expand. And they did not increase interest rates when they had the opportunity. In fact, what they did do is they created 5 task forces to study the problems rather than doing something to solve the problems. And that's typically how politicians act when they don't want to do something that's politically unpopular. They just create a committee, or in this case, a task force, and that takes the heat off them to actually do anything. So the Fed is probably not going to do anything for a while. But meanwhile, the economy is weak, the labor market is weak. And interest rates are still rising long term. So there's going to be a lot of political pressure on the Fed to cut rates and to ramp up the quantitative easing program that they don't even admit exists.
The Federal Reserve is completely trapped by national debt. Skip warns that the Fed cannot raise interest rates high enough to kill inflation without crashing the stock and real estate markets. Therefore, they will choose to let inflation rise.
Well, I think it already turned. If you go back to the first time the Fed cut rates after having raised them in 2021, long-term bond yields rose. And that was the opposite of what most had expected. Not me. I had basically forecast that rise in rates. But I think we've already seen that the Fed has lost control of the longer end of the yield curve. The bigger problem is the enormity of the debt now, closing in on $40 trillion. And the trajectory, the rate at which the national debt is rising, with our budget deficits really unofficially clocking in around $3 billion per year. And interest on the national debt, the largest increasing line item, probably going to get to $2 trillion a year sometime next year, on a go forward pace. So this is completely unsustainable, and the bond market is beginning to price that in, because there's going to be a default. The only question is how. Is it an honest default where the government doesn't pay? Is it kind of a quasi default where maybe they extend the maturities of the debt or lower the coupons, or a combination? Or is it just massive inflation? Do they just print a ton of money? But either way, the bondholders are going to lose, and that's why they don't want to buy the bonds. That's why they don't want to hold the bonds.
The US national debt is closing in on $40 trillion. The government is simply printing trillions of new dollars to pay its bill. Peter Schiff believes this is unsustainable, that will lead to a bond market default and a massive crash in the US dollar.
Well, first of all, silver was kind of capped by some overhead resistance going back to 1980 at around $50. And it was turned back in 2011 before it could reach that peak. Even though gold more than doubled its 1980 high, it was almost at 2000. Silver didn't get up there. And then when gold broke through 2000 and went to 3,000, 4,000, silver really did nothing. It kind of was going sideways. And silver at one point got to an all-time record lows, well over 100 ounces of silver per 1 ounce of gold. And then all of a sudden, silver exploded, and it really went from 30 to 120. It went up 4x in a very short period of time. So it was obviously unsustainable, way overbought, had to pull back at some point. And the catalyst was the breakout of the Iran war, and that started it. But, I think silver has pulled back. Right now, it's back above $60 an ounce. I don't expect it to go back below 50. So I think the old resistance is the new support. And we're really just started a new bull market in silver. So this is early when it comes to silver. And certainly if silver can go, from when I started buying it in the late 1990s, it was like $4 an ounce. Yeah. And so if it can go from $4 an ounce to $60 an ounce, or 100, it can certainly go from 60 to 200. I mean, that's only a little more than a triple. But it's not even so much silver going up. That will be part of it, but it's really the U.S. dollar going down. It means that you're going to need a lot more dollars to buy silver. You're going to be a lot more dollars to buy everything. So why should silver be excluded?
Silver is gearing up for a massive long-term move to $200 an ounce. Peter Schiff views the recent price pullback as a healthy correction and the ultimate buying opportunity before the real bull market takes off.
Well, it's both. I think that silver is going to go up even if we weren't creating inflation. I think based on all the new demand for silver, all the new uses for silver, with the huge increase in demand for power and electric power, and where silver is useful in that whole process, that means there's going to be a lot more demand for silver. There's just not a lot of supply. So just its own dynamic of supply and demand, absent inflation or any monetary premiums that start to build into silver, I think the price of silver is going to go up, just like the price of copper is going up. I mean, copper prices hit record highs. People aren't using copper as a store of value or as money, but they need copper, and for the same reason they need silver. Now there's industrial demand for gold too. There's plenty of it, but there's a lot more of a safe haven store of value. And central banks are not storing silver, they're not storing copper, but they are storing gold. But silver's got both going for it, and so I think you're going to see more industrial demand and more investor demand as an inflation hedge, as a levered play on gold. Because if gold does continue to rise, if gold goes back to 5,000, which I think it will, and then doubles to 10,000, silver should proportionally have a bigger increase. And as people see that, they will buy silver to get that leverage to gold.
Exploding industrial demand is driving silver, but supply remains critically low. It is essential for electric power and green energy. Because Wall Street analysts don't understand this, precious metals mining stocks are deeply underpriced and represent a huge missed opportunity right now.
Another theme you've raised recently, Peter, is that central banks are steadily reducing their dependence on the US dollar. And some analysts agree diversification is happening, but they argue it's unfolding far too slowly to materially change the dollar's reserve status. Why do you believe the market is underestimating that shift?
Well, I think there's a lot of complacency surrounding that and the dollar status. We kind of take it for granted in the United States, and part of it is the arrogance or hubris, involved, and we think there's really no alternative. We think the world is kind of stuck with the dollar, like our dollar, your problem, because they don't see an alternative. Like, well, what are you going to use, the euro? I mean, look at the yen. You can't use the yen. The British pound. What are you going to use that? Or the Chinese? You're going to trust them? But the reality is, and I've been saying this for many, many years, you don't need the fiat currency. You just use gold. And I think that's what's happening. The central banks are de-dollarizing into gold. Gold is the replacement for the dollar because gold was the reserve before it became the dollar. And in fact, the only reason the dollar achieved that status in the first place was because of its gold backing. And not only was it backed by gold, if you owned dollars, you had a claim on gold that you could exercise whenever you wanted. It was an IOU for gold. And the dollar itself was really a weight of gold. So we went off that in 1971. And so the world has kind of been on this fiat standard. But now they can go back to gold. They can go back to backing their currencies with something real instead of with just, the, worthless promises of the United States to pay you nothing.
Global de-dollarization is accelerating rapidly. Central banks around the world are aggressively reducing their reliance on the US dollar and moving back into gold. Once global trade cuts out the dollar, the American standard of living will take a massive hit.